the 6 trillion that is transacted in the world, 99% still involves a person at some point. Somebody is intervening or reviewing or touching that policy. Well, that's encouraging because that means there's 1% that is fully digital. And so as we look 5 years into the future, it's not going to take 20. That is going to go from 1 to 2 way faster than it took to get to 1. And it's going to go 2 to 4 way faster. We are entering that exponential curve because we now have the capability. I'm Wayne Slavin, CEO of Sure, and this is the future of insurance.
Wayne, it's great to sit down with you, and I'm excited to share a bit about what Sure is, and I think gives you a really unique and interesting perspective on the market. So thank you for joining me today.
Likewise, thanks for having me on. A big fan.
Cool. Well, let's start off with, like, first of all, you, but then I'd love to hear what is Sure and what do you do for the insurance space as a whole, but tell us about you.
Very good. I'm going to skip ahead to the important topics, but I'll do a brief overview. Just about me, serial entrepreneur, going back all the way into high school, built and exited multiple technology companies over the years. And kind of that journey led me to co-founding Sure through kind of a funny experience that I share with a lot of people when they ask the question, which was, I really think good ideas come from one of two places. One, it's in the bathroom somewhere. The other is on a flight to Vegas, never on a flight back from Vegas.
Yeah, fair enough.
But actually, those are bad ideas. The good ideas are on the way. And Sure came from, literally sitting on a plane and taking my experience outside of the insurance world, and really being curious and thinking about, hey, what would happen if we actually tried to go and apply some of these things that are working in other industries, in technology, to insurance. And that was just about 10 years ago.
Oh, so I thought you were going to say in the bathroom, on the flight to Vegas or something. Like, I think they're too small for anyone to have good ideas.
Yeah, you need open spaces.
Yeah, it closes the mind down, which maybe makes it just right for insurance. But so what was the idea? What emerged from that as Sure?
Well, it's been definitely a journey over some time, but we believe that a few things were going to be true. Big insurance companies sell multi-line, and those are the folks that have been around for a really long time, and that generally, not in every market, not in every cycle, but generally make money and do a good job. And really saw that there were starting to be some emerging insurtechs that were going monoline, and just taking a step back and looking at it and saying, hey, what are folks doing wrong and what are folks doing right? And really took the approach that we were going to do what we were best at. And ultimately, as an engineer by background, spent a lot of time building tech products. We were going to focus on what we could do best, which was tech, and being able to support every line of insurance rather than just boxing ourselves into one type. And I think we've seen kind of what folks call InsurTech 1.0, that the folks that went monoline had a harder time than maybe had they built their businesses differently. And I think for us, that's been true. And, really focusing, as we think back to how we got started to where we are today, it's all about the context of how people get introduced to insurance, how they buy it, and just making it easier. And I think that's evolved really nicely to some buzzwords that emerged along the way, but at the end, the buzzwords just lead us back to give people ample supply of products that they can buy, make it really easy, and people will engage with insurance. It doesn't have to just be the way it was always done.
Yeah. Well, so tell us, like, what does that look like today? What is it that, like, what is Sure doing for the sale of insurance or connecting? I mean, it sounds like you're kind of connecting product with the potential consumer for it. Where do you fall in the equation?
Yeah, where we sit in the equation is really we provide the software and solution to run an end-to-end digital insurance program. We do that for two sets of customers. So I'll talk about one side of the market, which is big insurance companies. So think the class 16 carriers, the national brands, the folks that are in every country in the world and every line of business. And we help them either introduce a new product that they've never sold before. So they actually don't technically have a legacy technology problem because there is no legacy because it's net new, de novo product for them.
Right.
And they've learned over, I think, failing many times that even if it's a good idea to go into that product, they can't actually get the support, the IT resources, the flexibility to do it in an effective way. So they sometimes just don't go into those markets. So that's kind of case number one. Case number, we'll call it 1A. And 1B for them would be taking existing products that they've sold through their traditional channels and then helping them take that and turn that into a truly digital transaction and matching the capabilities that the insurtechs came into because they started from scratch. And so they were able to kind of leapfrog ahead, and so we give them that capability. What we're best known for, though, is helping Fortune 500, Fortune 50, Fortune 10 non-insurance companies. So think big consumer brands, big enterprise software brands, helping them introduce insurance. And we call that, as an industry today, embedded insurance, but that was let's call it a term that was applied externally rather than an internally built term. But we've been doing that now for almost a decade, kind of under the radar.
Yeah.
And so that's everybody from the largest OEM automaker in the world to the largest EV maker, so in the auto space, to in the homeowner space, mortgage companies like Better.com, who originate and refinance mortgages, to software platforms like QuickBooks and folks like that who do accounting for small businesses, and really going in and delivering them kind of a white labeled, truly embedded insurance transaction, and where we've been able to say get 5, 7 years, 10 years ahead of the market is that market's still trying to do that in really simple products.
Yeah.
Right. Like one-time ticket purchases, really simple stuff. And what we've just been able to do, because we've focused on building capabilities and building a solution for folks, is that we've been able to do it for the most complicated products in the market. And I know your audience a little bit. They kind of geek out on complicated insurance products. And so what we're talking about are, 360 rating factor auto products that folks can buy without literally touching their keyboard. And when we talk about it, everybody's probably had internal innovation pitch decks that talk about it. But we actually have these programs in market with these, Fortune 10s, like, in every market in the US and actually globally.
So do you need to bring together the two sides of the equation? Like if you have an OEM, car makers, like we want to offer auto insurance embedded in our, like Ford's going direct with EVs. So like, if we're going to sell them, they got to be insured so they can get delivered. Are you then saying, okay, we'll go find the capacity, or are they coming with their partners to do the insurance side of it? Or could it be both? Like an either or, like are you just not to downplay it, but are you just the platform for it, or are you also kind of brokering both sides of the deal?
I mean, you picked up on something that most people pick up, 55 minutes into the conversation. So color me impressed.
All right.
Because the answer is it's been an evolution.
Yeah.
When we really got started doing this for some of these big brands that everybody talks about are now successful with embedded insurance programs, chances are we're behind them. And people just don't know. And that's really part of our business model and our strategy is that they're not our customers, they're their customers. But the second piece of it is what we're not. We're not a carrier. So we can be completely agnostic to who's underwriting, who's the capacity, who's the fronter, who's the MGA, who's the direct. It doesn't matter to us. It matters in the sense of we want to deliver the solution that the brand wants, and we don't want to compromise that because we've seen what works. And our favorite, customers come to us when they've had their hearts broken by a referral program that didn't convert, or lead gen or marketplace comparison, and so they've actually experienced the pain, and then they can come to us and say, and we've had this kind of verbatim many times, which is, hey, we tried this with name large carrier everyone knows, and it just didn't work. And so we know there's this huge opportunity to unlock for our customers, because every one of our customers is buying insurance at some point. They're just not buying it here. And they come and they say, so now we understand the value of what you guys provide. And we used to kind of take more of a passive role of we're the software layer for you to do it.
Yeah.
And but they would follow it on by saying, we've talked to every carrier.
Yeah.
None of them can do this.
Yeah.
And we would follow up. And this was kind of a second light bulb moment. And I think companies, get reborn every year if they're doing well. And this was like a new learning we had, which was, well, we actually do know who can do this
Yeah.
as a carrier.
Yeah.
And so instead of letting our customers fumble around in the dark trying to find who's the carrier who can do it for them, why don't we just take you to
Yeah.
someone who already knows how to work with us?
Yeah.
So they've kind of gotten aware that they can't deliver the technology, nor should they, right? They're not Apple. They don't build software for a living.
Yeah.
And now we kind of play that matchmaker. And what that really equates to is we are much more than just the software for you to use.
Yeah.
We are actually the rails that are connecting it. And if we could draw a parallel to another financial services related industry, we're more akin to what MasterCard and Visa do, which
Yeah.
is most people think they're the name on your card, but actually they're connecting banks who are lending credit and making loans to merchants who are distributing, in essence, the origination point of those, credit card transactions.
Yeah.
And they've built a whole lot of technology that nobody talks about, works 24/7 in every currency in the world, in every language, in every bank. It just works. And in essence, that's what we've done. And that's why I really say it is software, but it's the whole solution. And so
Yeah.
someone, to answer your question directly, someone could come to us and say, hey, we've signed a partnership with carrier X. Carrier X can't deliver the experience we want. We will say, great, we will deliver the experience that our brand wants. We'll deliver the product that they, let's call it manufacture, and we'll make the transaction happen. Or
Yeah.
we could just make it turnkey and they make one choice. And that has just given us a lot of learnings about where the friction is in kind of ultimately say the turmoil that's happening in the insurance market. And we all talk about it and we see the headlines, company pulls out of X market,
Yeah.
no new business. And we can all point to the traumatic catastrophe events and climate change and no rate changes and all this other stuff. But at the end of the day, I think if we peel back all that, this should be an industry that can respond to change in a much more nimble way.
Yeah.
And we're going through a cycle of really the status quo worked for like 20 plus years, and it worked pretty darn well for most carriers. And for most consumers, it basically was invisible to them. It didn't matter. But now that things are changing, it's not just the environment, interest rates, repair costs, lumber costs, roof problems, litigation. It's not just that, because that stuff should happen. But what hasn't happened is giving the industry solutions and tools so that when those things change, they can react. And we can talk about that.
Yeah. I mean, so I want to dig into this with you in particular, because I think I mentioned this when I was first introducing you, is like your perspective is really different from what most people in the industry are going to get, because you're at this, like, the use of the rails, like you're at the railway crossing, or I'm not gonna make the analogy work, but you're at this point where like you're seeing what's happening on the buyer side and the brands that are serving those buyers, and then you're also seeing what's happening on the capacity side. Both, oh, we can't offer that because economically we can't make it work, or we can't work that way, so this isn't going to work for us. It's like, yeah, but you're missing how the transaction needs to work, and your constraints are getting in the way of you getting to the market. You must be seeing like, here's where we need to get to make this all viable. Because I was saying to you before we started recording, like, we're at this point where coverage it's not affordable for insurers to sell at the rates they're allowed to sell it, or the rates where people could buy it. And if they could charge that, no one could buy it. So we're like in a lot of lines, not just homeowners. I know that's the front page thing, but there's auto insurance is incredibly expensive, cyber, like all these different lines of business. GL is super expensive for lots of buyers. We keep hitting these like economic viability traps, and they're not just like, oh, it's a tough couple of years and then it'll be fine again. I think it is like the economics are different, the exposures are different. Like you mentioned, climate change and supply chain and all that, but it's a completely different paradigm from a buying and kind of customer demand standpoint as well. It's not just like, oh, this interest rate environment and we just got to weather the storm. It is more of a shift. So how do you see, or what do you see emerging as the paths through that? Is it different products, different players? Is it just about how we connect the buyers to those products, or is there something more fundamental going on that you're sort of watching develop in front of your eyes?
Yeah, I think we have a unique perspective, and you kind of talked about it at that crossing. But if we take it down to its most fundamental levels, like what have we actually, because we've been successfully deploying these programs, what have we witnessed? And we've really witnessed it from different sides. So let's talk about the risk of not changing for a second and start from that. This industry has actually seen a change like this one. And it was really the shift to direct. Let's use auto as the example, right? Geico and Progressive moved 20 plus billion of premium in not that long of period of time, right?
Yeah.
And really shook the industry. And so what this leads to ultimately is there is going to be another shift of where premium is distributed. Ultimately, it's not going to take the same amount of time. It's just Moore's law. It's just the way the world will work now, is that to move the next 20 billion, whether that comes from direct players who don't adapt or the, let's call it the agent-driven players who don't adapt, it's going to come from somewhere because the consumers are demanding it. And the demographic shift is inevitable. And that is where I think we as an industry need to focus, is actually solving the customer pain point, which is nobody wants to sit on hold for 40 minutes. Nobody's going to answer the phone from an unknown number because there's somebody that needs follow-up information. It's not about a better CRM, it's not about direct mail anymore. And so we have to solve the customer's problem.
Yeah.
Because inevitably, if we don't, someone will, right? And so either it's going to be a new insurtech, which they haven't done, so I don't think it will be them. I think it will be let's call it the direct players, but playing and realizing that they are actually not just direct players. Back to the railroad example, the railroad barons got it wrong. They were not railroad barons. They were transportation barons, and they missed it, right? They should have owned planes, they should have owned trains, they should have owned trucks, they should have owned ships, they should have owned it all. And they got it wrong because they thought they're train barons. And so in the industry, I think executives should kind of look at it that way, that, hey, we are not just a direct company. At the end of the day, we should react to to customer and distribution opportunities. And the real distribution opportunity is connecting people to that opportune moment. That hasn't changed, and that won't change, right?
Yeah.
People have affinities with their car. People have affinities with all different places. They're not even engaging in the advertising the way they used to. So let's talk about that as kind of point number one. Part of that, though, is that we've experienced building these solutions for folks is the pain point that probably no one else on earth has really experienced in a concentrated company. And what I mean by that is, if you work and are at a carrier and you want to go launch a new homeowners program, the traditional process is you're going to go either build a filing, take your old filing, update a filing, draft one from new, meet to your competitor to get the same loss ratios and kind of rounding errors of them, or go to an RSO, to in essence license a rate service organization of which there's not a lot of choice, and license a filing, so that you could go to market and try grow your book. And ideally, when markets are healthy, you'll make some money. Maybe your early years, new business won't be that profitable, but you kind of know the playbook. And so we've seen it as being the system and solution, how actually difficult it is to take something that is approved that they could go sell, and actually go from the filings, the approved rates, the underwriting guidelines, and make it work. And that is where we see, by having done it many times across many lines, as opposed to selling folks a license to a piece of software, removing ourselves from what they do with it, how hard it is to use, how long it takes them to get to market. we've actually combined that. So we've actually experienced this is how hard it is to go from brand new filing to selling,
Yep.
or licensed policy filing to selling, and see that, and then maintaining and updating rates and updating new regulatory needs and things like that, and getting that deployed has just become so cumbersome. We're talking 3 years to roll programs out and get it to market and then update them, and there's just so much overhead. And so we sat down and really thought, hang on a second, this is actually a major point of friction to rolling out new insurance programs. There are plenty of folks who have insurance appetite, right? There's folks in Omaha that have lots of appetite for insurance and insurance type risk, right? But rolling out new programs that you can do efficiently is just too high of a barrier. And so we said, okay, well, where can we solve this problem? We thought about all the options. We thought, should we just become a carrier and go do it? Should we go buy a carrier and do it? Like what could actually solve a long-term problem? And we've been fortunate in our business that we can actually make long-term bets and think long-term. And so we said, from looking at our customers' pain points, looking at where we can add value, we're not going to be a better underwriter than anybody. It's just not our thing. We don't have that experience. We're not going to be better than the average carrier. But what we could do is help them get new modern filings, be able to update those filings in a way where they can get them to market in 3 months instead of 3 years. Like literally launch a brand new product, new program, right? So if you're a carrier in Florida and you're writing on, a form that's from 1987, it might not just be that it's bad catastrophe risk. It might be that you can't react to what's actually going on fast enough. And so we built a solution, which we call Anywhere. Call it that for a reason, because it's designed to help people deploy programs anywhere, whether it's for a carrier, an MGA, an insurtech, or a global brand who wants to go and build an insurance business, and say what we can do to solve the problem of 3 years to market, 30-ish vendors to go from filing to actual selling. What if we could collapse that down into a software and filing solution where somebody can come and say, hey, I'd like to go launch auto or home, you name it, product. And instead of have to go to the drawing board and build it from scratch and go to a actuarial firm, or if they have their own actuaries, if they're a carrier, we've already built it. It's already approved. And we built it in a way where they can customize it, add their own telematics if they want to, add a new endorsement for home sharing if they want to, and give them that capability, except they don't just get that. They also get the platform that runs the business. So if they wanted to go direct to consumer, that was their strategy. Cool, it's out of the box, supported. If they wanted to go embedded, they can do that. Here, the APIs are already built. And so what we've in essence done and see is that this isn't just a mispricing issue. And this isn't just a bad weather issue or a wildfire issue. It's actually that we can't react to those problems, and that new entrants can't come with new forms, new filings, new rates in a time that can react. So I'd say, pretty lucky streak, and the luck has kind of turned. And so people have only one lever, right? Direct folks can pull the lever to stop advertising. Not direct folks can just stop writing business, right? And we think that there should just be a new lever that will add supply to the market, will introduce new channels, right? Because if those businesses are running on modern infrastructure, modern rails, cool. Now to support your direct business, it's already out of the box. And by the way, if you wanted to go embedded with an OEM partner or a home partner, it's already built. You don't have to go build it again. And that's just how we see this. People are kind of missing the mark about what's really the problem.
Just not to get like nitty gritty on the components of it, but does that come with, is that a filed rate and form already, like that they can, so you've got paper, do you have capacity behind it as well?
So we we've designed it so that people can bring their capacity
Okay.
and use those forms and rates and make any adjustments and bring
Yeah.
their loss costs to really make it their own, but not have to go wait in line for years for
Okay.
approval. And so there are examples of this in the market.
Yeah.
Nobody likes those options in the market. We really actually surveyed, you might laugh at some of the data because, again, it points to just not solving problems.
Yeah.
We surveyed 200 insurance industry executives, decision makers in a recent State of Digital Insurance report. It's free; people can go download it. It's worth a read. And we look primarily at the impact of working with legacy, rate service organizations, which is
Yeah.
what we've created to launch Program Digitally. A whopping, and I kid you not, it was mind blowing for me. 71% of the people said this requires way too much effort,
Yeah.
massive amount of effort.
Yeah.
And everyone's got a lot on their plate. Everyone's resource constrained. How can it not have been made easier?
Yeah.
And what's more is that they're spending crazy amounts of dollars. 50% of the people that are using kind of this solution, rate service organization
Yeah.
solutions, adopting filings, are spending between $1 million and $10 million a year.
Yeah.
30% of them are spending more than 10 million a year for no satisfaction, no
Yeah.
joy,
Yeah.
and they are suffering the losses as
Yeah.
a result.
Yeah.
And so what do they get? They get not a whole lot of satisfaction. 12% of people, which in my book might as well be, random guessing, random, filling
Yeah.
out the form, are satisfied for what they get. And so, yeah, we've really taken a bottoms up approach
Yeah.
to how can we help people bring, if they have capacity, because we are, again, agnostic to the capacity. If you have capacity or you have a fronter and a reinsurer, whatever that stack looks like, how could you actually get a product to market instead
Yeah.
of having to go find product and then all these other pieces plus technology?
Yeah.
Just one stop. So you need your capacity and this, and you're good to go.
So, and this is more what I knew you for when you were talking about the embedded piece of it. I was like, oh, that's just a piece of what I thought they did. But that, yeah, I mean, I understand holistically where it comes together, and I agree with you on the necessity. I would say the 29% who, weren't like incredibly frustrated with it have probably just
12.
well, 12% were satisfied, but like the
Oh, yeah.
71% and the 29,
Oh,
like
yeah.
they're probably just like jaded or don't know better or what. But yeah, and then you would think the satisfied should be 29% because it should be all the people who didn't have the first problem, but even that's not. Um, Again, like because of the spot that you're in, you're playing in a space in the embedded side that we've been talking about for a while, and other than travel insurance, a lot of people struggle to point to something that isn't a couple of bucks in premium and like a neat but super nichey, like it's personal accident for when you're playing golf. Like that's fine, but I don't play golf. I probably would get hurt playing it if I did, but like I understand that. But yeah, having real examples of true like full on PNC products getting sold in an embedded fashion. But to go a step beyond and say, no, we're actually going to enable a more flexible, modern approach to coverage, newer forms, newer filings, and allow people to come to market faster and adjust faster, which is a huge part of the problem we've got right now. Where, as you look ahead, do you think that the products themselves, like at a much more fundamental conception, are flawed? Like, should it be indemnity? Should it be parametric? Like, that level of debate. Or do you think this is actually something we can resolve through building more flexibility into the traditional offering? Like, do we need a whole paradigm shift, or is this something we can work through?
Yeah. I mean, there are so many, I think, really good ideas for new types of insurance. And what's encouraging, like parametric, what's encouraging is that they do work in some markets in the world.
Yeah.
We haven't seen it work in this market. Pet continues to be like a much talked about type of insurance, and everyone quotes like penetration in the UK, penetration in Sweden, adoption in all these other markets, and yet here we have the most pets. It's just not it's just not working.
Yeah.
And so I am bullish that there will be new types of insurance products, no question. I don't think it will be sold by a carrier. I
Yeah.
think it will be sold by a brand who has big customer base, big lifetime value, and better technology so that they can go and enable a more complex product than, travel or hole-in-one insurance or,
Yeah.
whatever it is, or ticket cancellation. And that is hard. Like that is just a massive investment. And we're at the moment where I think probably because of the economy, probably because of, no profitability, but again, back to the earlier days of payments for Visa and MasterCard, there's still people who are trying to do it themselves, thinking they are going to build the technology, they're going to have the partnerships, they're going to do all of that. And it feels like we're in a moment where folks are starting to realize this has been tried again. We've tried this. We should just do what we do really well, which is claims, rates, underwriting, all of that stuff. And we don't need to go build our own railroad. We can use the railroad.
Yeah.
But I do believe that there's not inherently a flaw in the personal auto programs we have. There's not a flaw in homeowners insurance. Of course, there's pockets of issues on a state by state level that I'm sure, people can go way in depth about why they're not good, or they should be fixed, or we should, change this regulation and then all the problems will go away. I can't speak to that. But what I can say is that there's so much potential for those products being delivered in a frictionless way. And I don't know if you believe McKinsey, but I think they're probably pretty good at looking at data and understanding how the market goes. According to them, right, we're still at 99% of an insurance transaction of, the 6 trillion that is transacted in the world. 99% still involves a person at some point, right? It's still it could be on distribution side, it could be on the underwriting side.
Somewhere in that process.
Somewhere in the making of that sausage, somebody is intervening or reviewing or touching that policy. And what I'd say is, well, that's encouraging because that means there's 1% that is fully digital. And of that 1%, like we are already transacting 60 basis points of that 1%. And so as we look 5 years into the future, it's not going to take 20. That is going to go from 1 to 2 way faster than it took to get to 1, and it's going to go 2 to 4 way faster. And we are entering that exponential curve because we now have the capability. And it feels awkward to be like, shouldn't really smart people have solved this already? And then, we're like, but nobody's solving it. Okay, I guess we got to go solve it. Like, I guess it's just going to be us to do it.
It's a very exciting flight to Vegas then.
Yeah.
Well, and imagine how this whole conversation would have gone if it was the bathroom and not the flight to Vegas. So much better conversation. I will just point out, you saying like the products may not be completely flawed and there's hope for them. Someone could be saying, well, they're biased because you guys work on but your platform could work with Parametric, could work with others. You don't actually have a horse in this race. Like you could work with all of these things. You're not inherently tied to one or the other. And that's part of why I wanted to ask you this, because you're enabling. You're not behind only one path to this. You're about the flexibility of it.
Absolutely. And when somebody comes to us, and we don't work with everyone that comes with an interesting idea, but there are many ideas that are unproven that we will lean into and actually say, you know what, we'll invest some resources, developing capabilities to help that get to market because we actually want to see these new products succeed. And same way we are agnostic to the capacity and carrier, we're agnostic to the product. Could be brand new things, never happened before. Cool, let's go do it. And similarly on the data side, if somebody wants to bring third-party data, first-party data, a whole new score, their own telematics, cool, let's go plug that in. Like that, this is what we're here to do. Completely open as opposed to, the walled garden of, hey, you got to use our data source, you got to use our this, you got to use.
I think that's a good note to end on, is the idea for everyone is like, what if we could be more open as we looked at all these things? Wayne, great to hear what you guys are doing and just get your perspective on it. So thank you for joining me today.
Thanks for having me. And, I want to just comment on one thing. You said you don't play golf. I don't know how you can be taken
I
seriously in
know,
the
isn't it
insurance
weird?
industry
Yeah.
if you don't play golf.
I don't play golf and I don't drink and
Well,
I'm vegan. It's
we
like,
got, we
yeah,
got that in common. So
I'm
we're good to
done.
go.
Yeah.
Yeah.
Well, thank you for joining me today.
Likewise. Such a pleasure. Thanks.
Thank you to Wayne for taking some time and sharing about what Sure does, and it is along the spectrum of enabling not just the transaction on the embedded side, but something much broader, the flexibility, the possibility to go after a new market, address a market a little bit differently, or address a market you've been addressing in a more viable way that is less restrictive and allows you to respond to, look, a lot of the pressures that are moving around very rapidly that a lot of carriers are getting stuck with and not able to respond as quickly as they would need to. And I think it's interesting that, you can be a startup, you can be someone with a new idea, or you can be an existing player that's been at it for decades or longer. And, you need a new platform really, or a new approach to be able to respond. So I was excited to get his perspective given this really wide range of situations and companies that could be thinking about things a little bit differently. And they're trying to enable that. And also, as I wanted to clarify, he effectively gets to be agnostic to, insurtech versus legacy, or, complete blowing up of a market and coming in with something totally different, or, having a more flexible platform of what we already do to use that to address it. They don't have any particular view on one or the other, or only work with one approach or the other. So it allows them to see so much of what's going on. I just thought that'd be really cool. And yeah, I think the message for all of us to walk away with is, what does enablement mean? What does optionality mean in our context? And how much are we presupposing ourselves into a more constrained way to move forward? So take that back, think about that, and ask yourself, like, where are we putting up guardrails that maybe we don't need to? And are those guardrails costing us instead of protecting us? Sometimes it's the risk averse decisions that we make for good intentions to protect us, and us harming us far more than the protection ever could. So I will leave you all with that. Make sure that you come back always for more content from the show. The entire library of the past 5 seasons is there for you to consume, to listen to watch anytime you want. It's always right there at future-of-insurance.com. And with that, thank you for listening to another episode and another season. And we'll take a break between seasons, and I will see you back next time, whenever that is, at least a few weeks out. I need a break, and then we'll come back with some new episodes, new ideas, new guests, and maybe some new formatting, some new things to try on the show. And we'll start that all up in season 6. See you all soon. Bye-bye.